learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming into March 4th, 2020, and today was one of the most historic days in the stock market. I know that is quite the claim, but it is really something we have not seen in a long time. There was an emergency rate cut. We talked about this yesterday on the watch list, even into last week. Again, very, very surprising, and it created a reaction, so I want to talk about this. I'm going to explain to you guys really what this Fed cut means and why it is so important, but then how to look out and what to watch for. If you guys have been watching the watch list, we said the play of the month was TLT, and this has to do with all this. So I have a lot to talk about. I'm going to explain all of this stuff. I'm going to go over all of the plays we made today. I did make a lot of plays, and there was a lot of interesting stuff to note in terms of volatility, and I hope you guys are ready for this. So get prepared and get ready for something to happen over the next few weeks. Again, both up or down. However, I'm starting to lean more towards negative, but this key situation here, there's just a lot of uncertainty now. But let me not get ahead of myself. I have the keys for you. I have the plays, and then what I'm going to be looking at for this next coming days in the next few weeks. But the daily predictions, anything like that, a lot of that is going to go out the window. And also understand this too, I am recording this video hours before you probably get it. So whatever happens with futures and stuff like that, keep that in mind. But you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It is free 99. We made all of these plays live, but again, the live interpretation, if you need place to get news, anything, it is there. youtube.com/thestockmarket, from the opening bell to the closing bell. All we ask is that you're positive and respectful, and thank you again to everybody who has been. Honestly, we just want to source that information. It is a free chat room, especially with times like this. We know we're not here to argue, go back and forth, up or down, bear, bull. No, there's only chat, baby. But that has to do with what I want to break down now coming into the Fed. So this is important because when we look at both sides of the equation, I'm going to talk about it. However, this move has a lot of implications, and now it's not to say, although I said I'm leaning negative, there was a few problems. So Jerome Powell decided to cut rates, and they did a surprise. Why is it called an emergency rate cut? Because they had a meeting, they came together, and they announced an unscheduled meeting, and they decided to cut the federal funds rate by 0.5 basis point. One, that's a large amount. Remember, we've been looking at the Fed funds tool, and we've been talking about this, and now here's the next thing I'm about to blow your mind with. Take a look. This is what we were looking at prior, previous day probability. 100% people were expecting that in the next 2 weeks by the scheduled Fed meeting, but now look at it. We got the emergency cut, and the market is now still pricing in another quarter point after what just happened. So that is crazy. And now this is why I'm saying day to day doesn't really matter, because pretty much there's going to be market moves up into this date, and then this is the next time we are going to start moving. So that's what he did, and now this is a response to what's going on with the virus. And again, now there's two things to look at. It's either how the virus is affecting people, but this is the Fed. It's really the economic fallout. One reason mainly could be with China. Even if China goes down, it's not good for everybody. If this has caused a hard landing in China, this is going to lead all of the other global economies in the world, including the United States. They're going to have to react, or it's going to at least put pressure on there. But this is the problem with today, because if you see here what happened, the markets ripped off of it, but then a few seconds later, people really started questioning why. Again, I was shocked all day. I mean, this is an emergency rate cut. You guys know that's crazy. That was today. But here are a few problems, and this is what I'm saying, keeping it neutral, because now this is a very sacred tool when it comes to the Fed. I don't know if sacred's a good word, but it's their ammo. They're not supposed to use it all the time. And now to give you a context, in the entire history of the stock market, there has only been 9 instances of emergency or unplanned meetings that led to an actual move, and even less that led to the moving of the Fed funds rate. So even, an example, the most recent time, August 10th, 2008, that was the collapse of Lehman Brothers. We had a 50 basis point cut in the Fed funds rate, but before that, in January 22nd, 2008, they did a 3/4 basis point cut, but now prior to that, this is right when the subprime mortgages were collapsing. It was August 17, 2007. They changed the Fed discount rate. So they kind of eased some lending standards. They changed some things around, but they did not go for the Fed funds rate. So pretty much during the whole 2007, 2008 collapse of real estate, you saw only 3 surprise meetings, 2 of which changed the Fed funds rate. And then the only other time before that was September 11th. Like 6 days after September 11th, they did a 50 basis point cut to the Fed fund rate. And then April 18th, the economy wasn't doing good after this was like the second tech bubble. They didn't cut the Fed funds rate, but they cut the target rate on the overnight loans, which is something like the repos. And then when the tech bubble bursted in March 1st, 2001, they did a 50 basis point cut to the benchmark rate. So again, they didn't touch really the Fed funds rate or the main one that we're talking about. And then Russia and oil in 1998 was the last time they did a 25 basis point cut. And then other than that, they did a 25 basis point raise in 1994. And that was it. That's the whole entire history of these emergency meetings. So it is important. But now why? And now this is something I will say, I'm setting up my plays for this, but you have to be cautious because at the end of the day, how this tool is used, it comes down to Mr. Powell. I kind of feel bad for the guy because he's put in a weird position because now this is why I'm saying we don't know any information. Is this negative? Yes, it could be, but it also could be positive and the markets are just not liking it. That is a very, very, very possible scenario here. And you're seeing, again, 2001, September 11, this is an external crisis. I don't think the economy is bad. I just think this is an economic external factor affecting it. But your issue now as the Fed chair are making this move that a lot of people are both either criticizing or kind of bringing this to light is that you either react too late and the problem is already bad. That's what some people said with 2008 and all that stuff. So people are saying, why would you wait till the problem's really bad to try to fix it? Then you're kind of having to make up for lost ground. Or now some people say this could be the case. If you react too soon, then what does it signal? It signals panic or even something worse. We don't know. It either means something's really bad and the Fed knows and that's why they're cutting it, or they're panicking. And again, pretty much as if Powell is worried, maybe you should be worried too. That's what some people are going to allude to, but timing is of the essence. So we still do not know the reason why, I guess, and only time will tell. So that's why I'm saying this is going to be now a multiple week or multiple month event to see how this develops and what the markets do. So strap in. I hope you guys are ready. The markets are going to start getting really crazy from here, like every single title we post. So hopefully you guys have been paying attention and been on the Watchlist and on stream. I love you all. So remember, stay safe, be calm. It's not that crazy, but now it is kind of crazy. This, I guess we don't see it a lot. I react with historical events. I'm sorry. But part of now today, what made the market start questioning this, and as it came down, notice the last time they started to cut rates, and this was the first key that I put. Remember, this is the last time we played TLT, and we went big on TLT. That's why I said it was the play of the month yesterday. I was forecasting this, but I was still surprised that they did it so soon, considering there's another Fed meeting in 2 weeks. They could not wait that long. So again, that's where all these questions are. Is there panic or not? However, now, like I brought up, the first time we cut rates in August of 2019, remember, it was the first time in 40 they were either going to ignore the Fed funds rate, the futures, and upset the market by doing that, or it was going to be the first rate cut in 11 years. Well, it's the same situation here today in the fact that now this was the first emergency cut in 12 years, or they were going to upset the market. But now that's the next thing coming into the rest of this week. The problem now is that the Fed futures still are pricing in, and if not demanding, a higher rate cut. This is a problem, ladies and gentlemen, because now there's even more potential for the market to get disappointed by the next Fed meeting if they don't cut more. And then now what happens if now the Fed has to respond to the market? It's a weird feedback loop. But comparing this to that first cut in 2019, Powell said something. He said it was a mid-cycle adjustment, and he was very clear about that. He said it was kind of a one-and-done situation, but now after this emergency meeting, you did not get that tone. He did not really iterate. You guys have seen Powell. He has not been like, yo, it's a mid-cycle adjustment. He wasn't. He answered the questions. He said, we foresee some problems. There's issues. That's it. So this is how the markets kind of took it. And why did TLT go up? Because as people were, scared of equities, they went into value. They wanted that safe yield. And then again, with bonds, it's very simple. If the Fed's cutting rates, all of the rates are going to go down. That includes the 30-year, the 10-year hit a crazy low below 1%, which is nuts. So if all of the yields are going to go down, TLT goes up with that. So that is the main thing. But all in all now with the plays, watch bond yields. It's going to be a multi-week play, all of this. The market has definitely shifted, and essentially this is going to be a wider and more confusing Wuhan zone. Again, comparing it to yesterday, we're down 785 at close. We're still dropping right now. That was only a 500-point run-up from yesterday, but this is the true definition of volatility, and, well, welcome to the game. This is what we've been saying. So it's going to start getting wild, and now there's going to be a lot of issues between interpreting the underlying data of the market, the economics. We're going to get a lot of economic data tomorrow and the next day, but now it's not only the data, but how do market participants react? How do investors react? And then now the Fed. So it is going to get confusing. So be smart, take advantage of opportunities where they're there, protect yourself, and yeah, be positive and respectful too. We love you. So that is pretty much it. It is going to be wild. Hopefully you get an idea, but again, why this was so important. And if I didn't explain it, they cut the rates here and they did this rate cut because as economic demand is slowing down or there's issues, by cutting the federal funds rate, it's theoretically supposed to allow money to flow within the system, easier to borrow. That's supposed to go out through the system and ease some of the burdens there, make capital more freely available, and that should spur aggregate demand and overall economic activity. Again, if a virus could hurt aggregate demand, this makes sense why it's an appropriate tool. So we're going to be watching here. The next 2 weeks are going to be important. What bond yields do, the rest of the market in general, it is going to be very, very important. So hopefully you guys are in the game. You're on the watch list. If not, you got your stream alerts, aka your stream insurance, and overall, just be smart, look ahead, and it's better to be late than wrong. I don't think Powell agrees with that, but there's going to be many opportunities. Don't get FOMO, and usually if you try to get first to the party, you will get taxed, which we saw kind of the last couple days, so be smart. There was still a lot of deals and contracts expire, so there will always be deals, ladies and gentlemen. But let us get into the plays. So right off the bat, we're going to focus with TLT. One thing I will tell you guys, not only have we been talking about this play, yesterday, we've been in this for a while. I'm still holding this original TLT 170 for April, and I was anticipating playing into this next cut with everything going on. That's why we got it. But we bought these at 7 cents. They're at $70, $500 to $5,600. At one point, it was up to like $8,000-9,000 off this 500 investment, but I'm still holding these. And why I'm bringing this up, because I haven't ghetto spreaded this. Again, I like the bond play. This is looking very, very familiar, or very, very similar to the last time we saw TLT, the last time we played it. So that being said, though, I knew these contracts were inflated, so I had to try to make moves, but I said I was expecting all this stuff tomorrow. Yesterday, I said I was expecting, a potential move in what we were seeing with the Fed rate cut tool, but I'm very surprised we got the emergency cut, but before I got this trade in the morning before the cut even went through, and then afterwards we were able to play it, but I grabbed May's now, so we had April, and this is, you guys will see the plan and how I've structured it, because now I'm saying this is going to be multi-week. I'm going to be spacing it out with April, or I'm going to go well beyond April, and I want to space this out with time because bonds move slow and they're hitting historic points, but bonds are priming for a big move, in my opinion. That's what I'm looking at. Please do understand, I'm just trying to share the handlers, almost friends, resolution, finance, rights, educational purpose line. Thank you. So be smart, take profits when you got them, you guys. It's free money, free real estate. But we got these 185, so it's further out the money. And like I said, I didn't like how expensive they were, but at the end of the day, I was like, I do want more exposure to TLT and I want more time. So I was like, well, I'll scale in and then we'll go from there. So right in the morning, I bought 20 of these May 185 calls. I got these at 23 cents and they closed around 38, and I'm going to wait. If these come down more, I'm going to want to get some. It all depends. And I think that TLT now, the actual moves, I think the Fed will begin purchasing and doing some rollovers with bonds tomorrow, so we might see a move. However, TLT is known to capitulate. Bonds are going to go really, really low, and then they're going to shoot up, and TLT is like playing UVXY. The premiums will disappear, so you have to be careful with that. So I got 20 of these. That's the first ones I'm going to be holding on there, and again, there was a lot. The liquidity just was not there today, and you know why I got them? They opened up in the morning, they dropped, so I got them almost half off in the morning, a little bit higher than that, but again, based on the liquidity, every contract, you guys are seeing these chains were pretty dead. And I'll show you even the Bank of America play in another one, but I got those. That was the first play. And then the rate cut came in and I got Apple calls. I spent $500 on some short-term Apple calls because the market started reacting. I wanted exposure there. But then I used that as another opportunity to get more puts. So then I don't like these, but considering, the rate cut and what I was expecting to happen, I went to the Marches. I got short terms. I got these 165. So these are my least favorite play. I bought 10 of these for $40. They closed at 60. They shot up. They were at like 120 at one point. because they were close to getting in the money, and that's why I like TLT and how they move here. And if you guys notice, any of these prices that I got them at, look at TLT the other day, these contracts were all expensive, both the March ones, but now, and this is why I'm saying you wait till the volatility gets crushed, even look at the May ones, we got all of these at a pretty discounted price. I got these half off from what they were at Monday and Friday. But even then, anything April, May, June, those are the better ones. These ones are more of the YOLO type plays when it comes to there. So I got those, 165, still holding those. And then the next play, considering what's happening, it was banks. And this was a very interesting play now because we played both sides, and then I started getting May. I was telling you guys this on the watch list. I said it live on stream. I want May, but now with rate cuts, who's going to be kind of, the biggest benefactor or detractor from all this? It's going to be the banks, but now that repo crisis is coming back into play. Don't forget about that. And I think there's going to be an issue here with banks and what that means for demand, loans, all that. But what I did is I did a strangle. So again, you saw I got the calls. I have the TLT plays. TLT is both a bearish bet, even though we want TLT to go up. It represents more downside in the market. It's a bearish type of play. So I got Apple to go on the upside, but then I did a strangle both ways because now banks could do anything. We see how everything's down, and this worked in our favor because volatility started picking up. So pay attention to what happened here. We got these in the morning. I got the 36 calls. I bought 100 of these for $600. I bought these at 6 cents. So again, after the rate cut, you take a look, they started dropping. They came down to 5, got them at 6. They stayed pretty steady for a long time. But then what happened throughout the day, as the volatility increased, they came up to $10, 10 cents at one point, closed at 8. But we finished up overall 41% on those. But then I did another $600 on May puts. So this is a strangle. And I grabbed the $18 puts on Bank of America. I grabbed 50 of these, and I spent 12 cents. And you can see they just went straight up as the market dropped. So those plays closed up 60%. But what happened, Bank of America went down. We got these made plays, and this is showing you about volatility and options. So don't get it twisted here. That's why I said sometimes you got to be careful buying calls when the market drops because they'll be inflated, and that's what happened. We made 50, 60% on the whole position because our calls went up 40% and then the puts went up 60%, even though the stock dropped. So keep that in mind, but that's also telling us stuff about liquidity and how everything is moving with the market. There was that, and then I did a kind of bigger YOLO play as things were getting bad, and it was right before we started dropping because we dropped here, we held up here, and then I started going. We noticed that the UVXY was outpacing, and in general, just the whole nature of it, I was like, well, I have the TLT plays, I have the straddles on the bank, but I'm going after, this emergency meant a little bit more to me, so I wanted some exposure. So what I did was I went after the IWM puts for May because I wanted more time, but they were also still kind of expensive. But the SPY puts had more premium. The IWM usually has less premium playing the put side than the S&P, believe it or not. So what happened, I ended up getting 200 of these contracts because I said I was going to do it at Robinhood and I wasn't getting filled, and I thought I canceled the Robinhood. It said it canceled, but then it filled me on 100 contracts, and then I went to Tasty to do the trade, and then it filled me instantly, and then the other ones got filled. So I ended up getting 200 instead of the original 100 I wanted. But these were trading at the time for 11 and 12 cents. So I bought one set of 100 at 11 cents and then another set of 100 at 12 cents. So I'm holding 200 of these. Now you guys see they went up because we were down only like 200 points. Then we quickly went down 900. So volatility went crazy. But again, just like the Bank of Americas when they shot up, just like even the TLT, there's still a lack of liquidity. I'm standing by because there's no way. I know a lot of people are like, oh, it's the cult. You guys have to there's no way this is possible. If that was the case, any sweep in the world would cause this, and that's not what you see. But pretty much right at that time, every single option below it ran up. So we got it at a good time, sure, but I don't know if we got it at the best possible time or simply the fact that there was such little volume and liquidity on all this stuff that the market, with the lack of trade activity, it makes it difficult for the market to really price a lot of these contracts because the whole chain all the way throughout just started ripping randomly at that moment. But again, it did correlate at the same time. Again, we got it here. I think I executed on the trade around like 10:01 flat. So right before we started dropping. So again, you saw the underlying, but it was also the volatility, liquidity. There was a lot of different stuff. So those were some bigger plays that we got. And again, now I also did another set. I forgot. I got these towards the end of the day because as we started running up, and then now TLT capitulated all the way back to this level. And that's normal for TLT. I was even expecting a bigger capitulation, but I wanted to start getting a place marker and possibly building up a bigger long-term position. So I flipped the coin. You guys showed a lot of love with the likes, even lending tips video. I was like, I need to do a bigger play on TLT. And again, I just like this bond play considering what happened last time and just the historic nature of it. I'm willing to take that risk, and it does help that we got to walk away with a lot of realized profit last week. But you got to be careful parlaying to not give it back. Remember, we're not going to give the money back, baby. But I bought these 200 calls crazy far out the money. I didn't like this play. I really didn't, just because it was so far out. However, I wanted a good place marker, so I bought 50 of these at 27 cents, and we got them really right here near this bottom. But what happened, I mean, it may not seem like much, but it just because TLT moved so big the whole day, that was like a dollar move almost in 30 minutes. So factor that in for volatility and how that's going to affect stuff, because you still see it all across the board. Again, I think it's a mix of both liquidity as well as these underlying assets. But keep in mind, the IV is fairly high on anything above 185 on these Junes, because the further out the money, these are wild plays. I mean, again, I think bonds could definitely surprise, and bonds are slow mover. That's why it doesn't price a lot. But keep in mind, these are really far at the money. So if we start losing money on these, the goal is to try to average down on something a lot closer. However, I do like the time on these plays. And then finally, this news came out. This was the final play, and since I already ghetto spreaded that one play, it's still up 1,000%. We had those Aprils, has like a max gain of like 7,000. We got to realize, I think, 1,500 on the ghetto spread, or 1,200. I went with the short-term UAL. There was a rumor coming out throughout the day, and then even as Trump had a press conference, it was kind of hinted at it that there's going to be more travel bans coming. So I wanted to get my hand in the cookie jar because travel really got battered. I was looking for bookings all day, but they were too expensive. So I said, I'll get a March 20th put. I also gave another secondary play to look at. You could have looked at the 38s with less time, but again, I kind of wanted more time. But why did I get less time? Because I already know these Aprils are already inflated 1,000%. We already have exposure. But now, just like kind of those TLTs, you guys saw sometimes when the insurance gets really expensive and then it bounces like we kind of saw here, this is going to dissipate the contract prices. You saw two big bounces in UAL. That's going to jack up the shorter term prices. So the further out the monies, they become literally less quality plays, but they get cheaper. So that's why I went after this. I just grabbed one at 54 cents of the March 20th 35 put. So I would watch UAL and wait to see if it has a bounce, and you could go snipe any of the shorter term ones, but it's risky. And how do you know it's risky? Super high IV. We already have an April that we know is up, so it makes sense too. I only put $50 in. I gave you the tip that I use. Your best defense is a small budget. So I already had money, already had exposure. I only threw one contract with $50. If it goes crazy, we'll be able to profit off it. If not, I don't want to get caught paying too much of a premium. So keep that in mind. But that was pretty much it. And then I made a stupid play at the end of the day. I bought this Omer. There was news that, Azar, the smooth-talking CDC guy, said there was a drug approval. Omero's I thought it was a pharmaceutical, and I like the fact, this could give you some idea, but I grabbed that March 20th, 23 for 55 cents. But why'd I like it? Let's say, maybe you guys could still learn something, because I thought it was popping, and it was a medical company related to this drug stuff. That's why I was like, well, if there is an approval, because usually companies that end with ROS or, certain tickers at the end or oncology O's in the beginning, those are usually biotech stocks. So that's why I kind of jumped to those conclusions, and there's only a minute left. But I was like, well, if this is the company and it's not pumped, it doesn't have a premium, that would probably be the best one to play. So I threw it in there, probably going to lose $50 on that tomorrow, but we'll see. But that was pretty much it. Those were all the plays. Besides that, after hours was crazy. Nordstrom's got clobbered. There's still, again, going to be Target, Costco, and all that. But watch them. Watch Johnson & Johnson. I'm still going to be in that play. The next plays I'm even going to be looking at Walmart, and even how I'm moving forward, I'm honestly just going to be building a position on TLT. I really want to see how this situation develops. I'm going to be stocking it how I do. I'm going to be looking at my global macro indicators, and I want to see how this situation develops. But I'm pretty much only going to go for financials and TLT, and then if that gives us more signals, I'm going to see if I could get cheap plays to short the tech and the laggers. And then also, too, not even just short, try to identify some good straddles. But the key I need to wait for, just like with the Bank of America, we need to wait till that call volatility disappears so we could get good bounce plays at the very least, because when it does bounce, it is going to bounce viciously. And one point to even know, this is why you want time. Remember these SPY 343 calls? We put $1,000 in those. They went up even this morning. So these were worth like $2,700. That was with the rate cut. Even, they held a decent amount, but this is why you want time. And then we got these after things kind of capitulated there. But these are still holding the value. So that, again, point is the calls will go up. You just have to be a little bit better on the timing there and make sure we could secure the best plays possible. So I'm looking at both sides because, again, it's either the market is panicking to the Fed or the Fed's panicking. It's either they responded too early or they happened too late. The point is there's uncertainty. That is the key. We don't know what's going to happen. I don't know what's going to happen. So please don't ever assume that. I'm just responding, but now I'm coming up with the thesis and I'm trying to put myself in win-win positions, or again with these TLTs, if I'm building plays around those, I'm giving myself time so I could finesse my way out of it. And even though we're already up on a lot of them, if things start to move, and things do change, I'm going to respond to that news and take profits or ghetto spread it and keep that there. So keep that in mind. Again, now watch Walmart. They're going to be a lagger. I'm still holding those VMwares. Those are up. So if you still have those, I'm still keeping those. They got a little time and we're close. If there's another big sell-off, we could get in the money and those could be nice. Again, we have the UAL. I want to watch the Microsofts and Apple. I still have that Apple Pay. Besides the calls that I got, that one old premium sell kind of working for me. But Microsoft, don't have any positions with that. I want the premiums to kind of level off here. But again, these guys have a lot of meat on the bone. So watch them. Again, watch banks. A good one is also JP Morgan. Another play I'm going to set up on is this one, FAZ. This is like a UVXY for financials. But just like TLT, any of these types of ETFs, I need them to die, especially a 3X ETF. So I want this to come down, but that's going to be one I'm going to have my eye on. And then HYG, I was considering selling this because I did want to take profits considering how big of plays I did take today. However, I was like, all right, we'll wait a little bit. But HYG is kind of TLT's ugly cousin, but HYG won't move as much as TLT in this scenario given the rate cut. So keep that in mind. We're still holding those 3Ms. Those came back to life, but the Cloroxes we averaged down to came up, but the ones we bought the other day are down. So this could also be a play. I might want to even average down on those if things escalate, or we try to get some more time on those. But the April 135 puts are up 15%, but the April 130s are down 27% when we bought them. So keep that in mind. That is a play without premium now from when we purchased it. And then the Netflixes came back up in value today, even just barely, but they hit 52-week highs today, then started dropping. It was pretty wild. So I like Netflix, though. I still think they're lagging, so I'm still going to be holding and riding out that play. And then our Googles did come back to life. I was surprised. I was going to average down on those, but I was still scarred from that getting clobbered the first time. So we'll see. But there's that. TLT is going to be the main play, and then IWM as we've set up. But I don't like the IWMs as much as the TLTs. But the TLT, it's not about getting in late. It's about getting in at early or late. It's about getting in at the right time, and that's what we need to be hunting for. That's what we're going to be looking for, and get ready to build a position, but don't be too impatient. If you are too impatient, it will crush you. Believe me, you will get taxed, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure you keep your helmet on, and we see you in the morning. Stand firm. Don't get too emotional. This is why you got to protect the balances. This is game time, baby. Hopefully you're making moves. Hopefully you're being smart, and do not overreact. And what you need to be taking in is that this is the opportunity of the lifetime to learn something. I don't care if you made money, lost something. You get to learn something and see something and watch how this plays out. But do not get negative and focus on the negativity, what you coulda, shoulda, woulda. No, you got to focus on the opportunity, because every week it's presenting something. Do not be short-sighted. So let's get time. Let's get in the game. Let's be positive, respectful, show love, be there for your community and the people around you. The code loves you. I love you. Stay blessed. And I'm going to see you in the morning. Let's go.